Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Friday, the 21st of November. Starting off with the FTSE 100, which has done what we didn't want it to do, but we're perfectly aware that it could do that, which is and was to test the floor of the channel there from back in June. 94.30, the low just below that, and we're bouncing back a little bit. The key here is probably to get back above the 50-day moving average at 95.10, so that today's uh, probe lower will just look as though it's the bottom of the move. Problem here, though, is that even though we've come back a long way from the record peak there at 99.30, the RSI is still at 40, so that does actually give the market some wiggle room to even go down as low as the October support at 92.76. But I suppose ahead of the budget, what could possibly go wrong? But the key here probably is, as I said, to get back above 95.10 and the 50-day line. If we do break down below the 94.30 level, then we do have the potential of testing October support as well. Moving along to the DAX, and the DAX has already been looking rather even more sickly than the FTSE, but here we've been touting the old April gap there at 22,600, and so far we managed to bounce above it. Still, probably is something of a magnet for the price action. Maybe something to see next week. Otherwise, we've got the 200-day line there as initial resistance, 23,466, and that will take some breaking, even though we've already come down a long way. The Dow is next, and here the situation was that the market was near the floor of that rising July trend channel, and the problem, though, is that we've got the old October support there at 45,500. It'd be difficult to avoid that given the current situation with the fader at the 50-day line, and also the RSI is still not oversold. It's at 36, so does allow for another day or two of downside at the minimum. Main support, I suppose, is the September support there at 45,000 and the 50-day line 46,600, the initial resistance. Moving on to the cryptos, which, if anything, are even worse than the equities at the moment. We had the fear that that line there from back in March, 86,000, would be hit, and it was. And we had an extra fear that actually the rising trend channel here from the summer of last year has its real floor at 75,000, or at least 76,000. And that looks as though that might come to pass as well. The only saving grace at the moment is that the RSI is at 21, so very oversold. And it's probably now more oversold than it was even back in February this year. So I suppose if you are a fan of Bitcoin, maybe that's what you're thinking, that when this situation does unwind, and so we go down to the mid 70s, then that would be a very good buying opportunity. But certainly being as oversold as this, I don't think we've been that bad, and since basically back in the summer of 2023. And you can see that after that, that actually started a very big rally from the 25,000 area. So maybe there is hope once this situation settles down. On Ethereum, we were hoping that the market would stay on the right side of 3,000. Unfortunately, it hasn't done that. We had a temporary floor of the falling trend channel there from back in August, around 29.50. Below that, we've got the prospect of a test of June support at 21.20, and it's almost as if this market is trying to catch up with the horrors that we're seeing at Bitcoin at the moment, but not a good look at the moment. And the RSI at 26, so not as oversold as Bitcoin is currently. Back above 29.50 would be the first sign that we are trying to regroup in a successful way. On to gold, and here the position is that we're still bouncing above a rising 50-day line and bouncing on the top of the old April rising trend channel. That is around the $4,000 mark, so above 4,000, looking for a zigzag back to 4,200. Below it, then we've got the risk of 38.80 and the late October support. Best case scenario on the upside at the moment is a November 2024 resistance line projection heading up to 4,600. But the way things are going, I suppose that would have to wait now for at least the end of January. Moving on to the stocks and starting off with Ajax, which is looking decent within that rising trend channel, bouncing above a rising 200-day line and bouncing above at and above a rising 50-day moving average. We've got 7 pence as the initial target. Best case scenario target here maybe for the end of January, something like that, would be up to 12 pence, which is a May resistance line projection. But the shares and the company starting to look rather good at the moment. On to Eurasia, which, surprise, surprise, is rising. Obviously, we've got the latest glimmer of hope of peace in Ukraine, and that's helping the shares again. Obviously, in the recent past, we've had these false storms. We've had so many. What's different about this one, perhaps, is the way that we pushed through a rising 200-day line, and we've also now got the rising 50-day moving average, which didn't really have before. So that could mean that we're going to a golden cross, and that 6.3 pence by the end of next month is the minimum on the upside for these shares. But ideally, you'd like to see the shares stay or close the week on the right side of that 200-day moving average, around 4.3 pence. Eurasia is going up on Ukraine peace hopes, and so is Ferrexpo. Obviously, we've been here before, and even today we're failing at that 200-day line at 57.5 pence. But at the end of the day, close above that, and we could be going to 66 pence. The good thing this time also, as in the case of Eurasia, is that the 50-day line is rising. And we've also had a bounce for the RSI at neutral 50. So there are a couple of things there that even if there wasn't the peace hope, would actually point to Ferrexpo heading back to the top of the range there. On to GCM, and here you see that we've bounced above the floor of that rising trend channel and the 50 and the 200-day line as well. Just going through the 50-day moving average at 6 pence, above that, looking for up to 9 pence by the end of next month, which is the top of a rising trend channel from back in March. Good news today from ITM Power, and that's helped the shares at least bounce off the floor of that rising trend channel from back in April. The level there around 70 pence. But what the bulls would really like here is an end of day close through the 50-day moving average at 77 pence. And I suppose they'd also like a break of that resistance line there just above it from last month. And they'd also like the RSI to get back above neutral 50. So a little bit of work to go there, but above that 50-day line, we should be on our way, or could be on our way towards an eventual £1.10 target for maybe the end of January or February next year at the top of that rising trend channel from back in April. But the key here is staying above the floor of the channel at 70 pence. Almost by stealth, we have seen Upland Resources continue to move higher. This is the third target which has been hit now, so around 2.75 pence. As far as I'm concerned, not really much in the way of resistance now between 2.75 pence and the gap there up to 4 pence. We've got the top of the last year's range up to 4.5 pence plus. But looking for the shares now to move quite steadily, at least to an initial 3 to 4 pence target by the end of next month. So very encouraging indeed there. And you can see that the shares bounce well above the rising 50 and 200-day moving averages. So surprisingly strong on that. As far as WeCap is concerned, congratulations to anyone to all those people who managed to keep the share price down. Amazing that it's still down here. I think the minimum conservative level on the upside on a see-through valuation would be 7 or 8 pence, not 3 or 4 pence, but that's the London market there. Rising trend channel there from June, top of the channel there, 4 pence. So as we are so conservative, we're going to go for 4 pence by the end of next month, while we're above the 50-day line at 2.6 pence. Finishing off with the stock which I don't normally look at, or the type of stock I don't normally look at, but we've got Wizz Air, and here the interest is that we could be in a broadening triangle base. We've broken above the 50-day moving average there at 11.25 pence, and above that looking for 13 pence perhaps £13 by the end of next month. So we're looking at too many penny shares. So just repeat that, above £11.23 and the 50-day line looking for up to £13 by the end of next month. What's helpful here is the way that we gapped up, filled the gap and then bounced. So that does indicate some positive momentum here. That's it for me today. More updates tomorrow.